Oh yeah! We are back, everybody! Welcome back. Blackfire Technical Analysis YouTube channel. I am your host, Crypto Bro! And we are back at it again with another edition of the daily live stream.
And this week in stock ball, will the market ever collapse? Probably fucking not. Why? Because it hates everybody.
We have plenty of shit to talk about today. I'm pretty excited to be back. Nice, enjoyable, long weekend. And you know, had a really awesome holiday weekend as, you know, a holiday. Very nice weekend. Got to hang out with a lot of friends and family. Got to eat a lot of food. Got to drink a lot of warm stuff, liquid that is alcoholic. Phenomenal weekend. Definitely a well-deserved and well-needed break from all the chaos that is my everyday life, and we are back. Again, I did mention we have plenty of stuff to talk about, but I do want to give you guys a heads up. First and foremost, I am still constructing the instructional video that I mentioned. It's a slower process. Again, I wanted to be as meticulous and as my brain is jumbled tonight. The drive home really fucked me up. It's fucking snowing and the roads are ass, and I didn't expect them to be that bad so quickly. I'm trying to be as specifically detailed with all of the content that is within this new instructional video as humanly possible. I do not want to miss a single beat. I know I said we were going to shoot for Monday through Wednesday. I didn't do any of the work on that instructional video over the weekend. I just started working on it now. I'm writing everything down. I want to make sure that I'm going step by step for all of you guys to see my trading, you know, my trading mentality basically. And I don't want to miss out on any of the details. So I do hate to say this, but worst case scenario, I am going to have to push that potential all the way back to this Friday. I'm still going to try to get it done by Wednesday, obviously. But again, I want it to be perfect. I want it to be a very, very, very helpful and very educational video. Again, not to be construed as financial advice. I am not a financial advisor. But at the end of the day, that video, I want it to be very, very, very detailed on how I see the market, how I identify trends, how I'm using the 21 exponential in confluence with the RSI, historical volatility percentile, and the stochastics. I want you guys to have all the details of how I see each and every trade that I make. So again, I'm going to try to get it done by Wednesday, but if not, at the latest, definitely the latest will be Friday. I have to extend that timeline a little bit. I have to be more realistic because I'm trying to provide as much content as possible. And I'm trying to get it to where I don't have to edit it. I can just do one shoot, get everything out, and post it. So there's an update for that. There will be streams every single day this week. Give me them requests. I'm looking to, you know, slow the pace down a little bit. I think I've figured out my feng shui here. I am trying to be a little more calm, more collect. I fail at that sometimes. You know, I start off nice and then I just start speeding up because I'm trying to get everything done. But time is no factor for the stream tonight. I'm going to try to keep everything slow paced. I'm going to try to keep everything as detailed as possible. I think I'm just blathering on. We have plenty of shit to cover today, so let's go ahead and get covering. We're going to start with NASDAQ. And this really kind of surprised me. Another little fake on that 21 exponential right here coming into yesterday's closure essentially. did see an open below the 21 exponential, but again, we got the first warning shot fired here on the 25th, and then today, boom, we never got confirmation below the 21. The 21 exponential still has a positive slope, although it is slightly weakening, right? It is slightly weakening, but when we see this kind of drop here and then an instant recovery, this is still being considered support as far as the 21 is concerned. We did see, price action pull into this current support, the current low at 15,980 first and foremost, before inevitably holding that region, buyers stepping in, confirming that region as support. Now, am I looking at this as a structural higher low? Only time will tell. If this one continues expansively to the 2.272 Fibonacci extension target at 17,240, then I'll be convinced that maybe this, this region right here is, acting as a structural higher low. What doesn't make sense to me is the structure itself, right? If I was going to look for another confirmation of a structural higher low, it'd be somewhere along this diagonal trend line here. Now you do see we can't really adjust that, right? We can make a little bit of a fork off, but that's where the structural integrity becomes a little bit more invalid, right? You see the slope on that? It's very high up. So, it is technically a higher low. I don't think it's a structural higher low. I do think it is good enough for continuation, but at the same time, I am still preparing myself for some bearish divergence to potentially formulate. We already have bearish divergence here twice already on the RSI, basically forcing price action to the downside, confirming, technically lower lows, right? This low, while it is inconsequential, it is still considered a low, and we do see new lows on the daily time frame, which is indicative of a change of behavior, which tells me that the pressure is on to the downside, but that speedy recovery on that 21 kind of argues differently. Nonetheless, we still see RSI pointing to the downside after confirming a little bit of bullish divergence, which is that's the reaction that you saw, that bullish divergence being confirmed here, right on this little down arrow here, and then we see RSI peeking its way back up to the exponential and potentially looking to get rejected once again. Now, again, this has nothing to do with the overall trend. This is more micro that I'm paying attention to right now. What's the next move? What to look out for? Again, the overall trend as a whole is still not being threatened. And to make it simple, we're going to clear the chart. Right, we're going to clear the chart here. Again, I want to try to simplify this stuff. This is the low that I'm looking at right here. Boom. Right, that is ultimate change of behavior from a macro perspective. Macro, long picture, bigger picture, right? The whole formation, bigger picture here. That's the macro. The macro trend is not at threat, in my opinion, unless we break that current low and basically confirm new macro lows. That would convince me otherwise. Now, coming back into this formation here, we did find support here. And we have resistance here. So we are technically ranging. Clean and obvious. We are definitely ranging right now after a beautiful breakout to a blow off top. Not really seeing any, real confirmation to the downside right now. What basically this is telling me is like, hey, we could be looking for another bullish reset. We could do it here. And again, I'm not convinced. We did hold the 21 as support, which tells me, I have no choice but to look for another test of the upside target resistance here, like 16,620. And then we have this little piece de resistance, this little resistance here that is a little more major in my opinion here. Again, more touch points, the more relevant here. If we are to see a test of the all-time high resistance, I need to see an opening closure, or at least a closure above 16,430 before I'm convinced of any continuation to the upside. On the vice versa here, again, since we are in a range here, I'm looking at the bottom side support, 15,980. Any candle closure below there will confirm new lows, and the next target to the downside is going to be something like 15,710, give or take a few dollars here. But again, that would be more confirmation below the 21, right? If we see a break below the 21 followed by an open and closure below the 21, I'm going to be very convinced that this is likely the first target to the downside for price action. Again, 15,725, anywhere in that ballpark. Between 15,007 and 15,725 would be the general target that I'm looking for here. And again, this stuff isn't art, you guys. It's not a science. I'm not looking to be, perfectly spot on. Typically, when I go for if I'm going to short this position here, I'm typically going to take profit, not right on the line, more like, a percent above the line. To be, maybe in this case, like a 0.5%. It'd be more like 1% for cryptocurrency, but I try to stay slightly above because, close enough is close enough to be considered a tested target of the downside. And that's kind of how I set up my, my take profits. Never want to enter my take profits or anything like that right on, perfectly lined up, right? This isn't art. It's not a science. So talking about stochastics here, more confidence to the downside with a fresh break below the 50 read here. We do see a little bit of waning momentum, right? We do see a little pressure to the upside here, but again, it's still pointing down. The exponential and the stochastics are still pointing down, which tells me momentum is still down. We're currently seeing rejection at current resistance, which is confirmed as resistance with all these touch points here. And failure to see a closure above that region, I'm going to be looking for the bottom side of the range here, and that's my main disposition. Momentum is to the downside. We did just put in a nice top, played out 2 drives of bearish divergence, 1, 2, excuse me, 1, no, 1, 2, yeah, 2 drives. I'm tripping right now. 2 drives of bearish divergence, played below the 21. 21 did not confirm as new tentative resistance, held support, and now we're looking at price action rejecting current resistance. So again, it's all about what happens next that I'm going to be convinced, right? If this one breaks the downside, I'm going to be convinced it's going to continue, and it likely continues to. It likely continues to that diagonal trend line that we're looking at right here to confirm some kind of potential macro high or low. And again, I do not think this is a breakage structure. I still think the structure is very valid here. And quite obviously here, we do have our fibs to talk about. Right, any closure on new all-time highs here, I'm going to be looking for that $17,280 target to the upside. But again, as long as it's ranging, you guys, I'm going to be looking for price action to remain in the confines of this range until proven otherwise. We have our, we have our targets to the downside. We have our targets to the upside here. The most important thing, in my opinion, that I'm paying attention to is this range here. Whether or not this range breaks to the upside, breaks to the downside, or holds. Basically, I have no decisions to make until one of those conditions is met. Moving on to SPY futures here. This one breaking down a lot more aggressively, not confirming a low. This one being more indicative of continuation to the downside. To be quite honest with you, yes, we did see an immediate bounce back above the 21 exponential, which technically confirms the 21 as support still, right? It hasn't been confirmed as new resistance, but we're already seeing the red 10 symbol here push price action to the downside. This is a sign of reversal. That right there is a little bit of a sign of reversal. If we continue, again, if we see a secondary candle closure below, well, actually, this would be an initial break. Today would be an initial break if we close, fuck that. I'd say if we close anything, below 45.70, the 21's not fucking support anymore. I'm gonna be looking for a major continuation to the next target to the downside, right around 45.50, and likely lower, all the way to this region here, 44.75, right? Perfectly in line with that diagonal trend line of peace and prosperity. Again, the trend as a whole is not at threat until the macro low has been eliminated, right? Until price action closes below like 4,300 even, I'm not convinced of macro change of behavior. Micro, short-term time frame, medium-term time frame change of behavior, yeah, I'm very convinced. I'm very convinced that this one still continues to decline. We do see RSI here, major rejection of the bullish control zone right on the 50 read here. Nice little bounce. It looks like it wants to drive lower. Stochastics with a critical signal as well, back below the 50 read at the same time. We got a lot of critical bearish signals flashing off right now, which is definitely indicative of continuation to the downside. The only thing that would convince me that this one won't continue would be a secondary closure back above the 21 to once again confirm it as support alongside this support level. Again, we did see the initial break, boom, below the 21. Secondary candle closure did not happen, which means this is not resistance. This is still support technically, and so is the 21 exponential. But you see, you're seeing likely which way it goes. We have plenty of time. I could be absolutely wrong. It could recover back above the 21, but if it doesn't, I'm going to be gearing up for more moves to the downside here, especially on expanding volatility. If we see continuation and downtrend confirmation on expanding volatility, I'm going to be looking for price action to really decline here. And again, unless it breaks that diagonal trend line, I do not think the overall trend, the macro trend, is at threat just yet. But we do have some selling off right now, and it doesn't look like it's come to a conclusion just yet. U.S. dollar index. God, my throat is low. U.S. dollar index hitting hitting new highs, coming down. Couple of critical signals to think about on this one too. Just give me 1 second. Look at that! What the hell? Hey! Gotta get this bread. Gonna get this bread, motherfuckers. Alright, let's talk about a couple of the critical signals here. Again, turn everything else off. That's the first thing I try to tell myself. Turn everything else off. Now, does this look dire to me? Not fucking really. Not really. I'm still very long-term bullish on this asset. Again, seeing new highs, nice bullish explosion. You gotta expect sell. You gotta expect sell pressure to take over at some point. The bulls lose steam all the time. When the bulls start losing steam, or the bulls start making plans for bullish continuation, you see some sell pressure, and that's kind of what I believe we're seeing here. I do not think we have a break of structure just yet. When's the last low? Wow, maybe technically a change. I don't know how this is considered a fucking low, but okay. Technically a change of behavior has been initiated. We do, again, have a couple of critical signals here. First one I'm looking at is a fresh exit out of the bottom side of the bullish control zone, and a confirmed bearish divergence arrow in confluence with a rejection of the bottom side of the bullish control zone and the exponential, right? Anytime I see that, that's the first tell that this one likely continues to go to the downside here. Another one is the stochastics, not confirming any bearish divergence, but boom, a swift exit out of the bullish critical zone back into the bullish control zone right here, basically signifying potential continuation. A little bit of a cool off, right? It would not be out of the question. It would not be out of the question to see price action all the way back down to this diagonal trend line of peace and prosperity, right around $94, maybe $94.15, to confirm some kind of macro structural higher low once again before continuing onwards and upwards. These lows here are inconsequential to me. These are not structural lows, in my opinion. These are just continuation lows, right? Has nothing to do with the overall structure. And the way structure is looking, yeah, it looks like it wants to come down a little bit more. I would be confident in saying that a pull to the 21 exponential is very likely here, all the way down to 95.70. Any open and closure below the 21, I'm going to be looking for price action to go to the next target down, right around 95.22. Maybe bounce here, and then I would come back and reconsider price targets. And on the flip, if this one does recover, I would say at a bare minimum above the wick high on the 28th, which is 96.45. Any closure today above 96.45 likely leads to the next drive up, in my opinion, as we would confirm another higher low, right? Another higher low right here in confluence with the prior higher low. This one not so consequential when it comes to the lows that I'm looking at. And again, we're above the 21 on basically everything that we analyzed today. As long as we're above the 21, price action, I'm looking for price action to move up, and especially NASDAQ, especially DXY here, significantly above the 21 exponential. SPY futures, not right now. SPY futures is currently below the 21 exponential, and if it closes, then I'm going to start looking for targets to the downside. Same kind of feeling on this. I'm watching the levels. We're still above the current level at 95.92 here, and I am not convinced of any downside push unless we close below that region, and more conservatively below the 21 exponential. And I'm not convinced of any push unless we confirm a low here above 96.46, right? Until one of those conditions is met, kind of waiting for price action to, you know, confirm some kind of signal. Again, we have warning shots. Boom. We have warning shots being fired off that tell us that potentially seeing, you know, a decline in price action is a big possibility here. But again, I'm a more conservative trader here. If this one is going to continue to the downside, I'm looking at the 21 most importantly here. An open and closure below the 21 will convince me on all accounts to start looking short on assets. So above the 21 until it breaks, I'm rooting for the upside. Again, until that condition is met, I'm just kind of stagnant. Again, it doesn't look like it wants to come down. I'm more geared towards the downside here, especially because we have a little bit of a lower high, but I've seen some weird shit in the US dollar index. Sometimes I'm a lot more conservative on DXY here, just because I've been so wrong so many times on this asset, especially when I was calling, you know, bearish all the way back in the back here, you know, with this lower high here. I was like, yep, this is going to new lows, and guess what? It fucking proved me wrong. So I've been taking my time with the US dollar index and being a little more conservative with it, because, you know, at the end of the day, you never know what's really truly going to happen. I like to wait for signals, like significant, legitimate signals, to all line up at the same time. We already have a couple of warning shots on Stokes and RSI. The next thing I need is the 21 to be affected, the 21 to break, and that will definitely convince me of downside decline here. We're going to go ahead and move on. I think everybody is interested in the Hall of Fame. I know they are. It's been quiet about the Hall of Fame. I think people are mad. Continuation. I'm still looking for continuation here for the Hall of Fame. New lows have been confirmed on this candle closure. This bearish engulfing candle closure here, not looking too hot. Right at what, 193, down 3.5% today. A secondary closure below this potential resistance at $1.96. I will be convinced that a pull to $1.75 to $1.78 is going to be the next realm of possibilities here for the US dollar index. Not only that, but we've actually taken out the last low. The last low of peace and prosperity, the last low that could have potentially considered this a macro uptrend. We have a long-term change of behavior, ladies and gentlemen. Let's see how the weekly looks. Not fucking good. Weekly change of behavior was confirmed. Wow, last week we got a new low on the weekly time frame. Bearish. This is bearish. Looking at a potential fresh cross on the weekly stochastics here in the bearish critical zone. Not good. RSI in the weekly time frame looking to re-enter the bearish control zone as well. Not good. We're gonna go back to the daily. Take a look here. You know, stochastics, you know, a fresh cross up, but it doesn't tell me shit here. Again, you know, a fresh cross up on selling. The bears are obviously in control of this asset right now. Same thing with RSI. You know, back below the exponential, using it as tentative resistance. Negative slope has been reclaimed for the exponential. I'm looking for a re-entry into the bearish control zone. And again, you guys got to remember at the same time, number one, the project's not done. Number two, the asset's not even that old. Number three, it's likely to be bad. It's likely to be bad from a trading perspective, from an investment perspective. Good God Almighty, please, I hope Bear Jesus steps in and sends this to the stock market abyss, because I believe in the next 3 to 5 years the project will be complete and they will start generating actual revenue. And I think the company can do great things with that. So I'm going to be scooping up as many of these shares as possible. But this looks terrible. I don't have anything positive. The only thing positive for this one, in my opinion, would be a change of behavior, and that would be a closure above $2.30. And from a conservative standpoint, back above the 21 exponential, and we are nowhere close to that right now. Nice little fake out. People got excited, but I was like, yo, it didn't close above. You know, me and my business partner were talking about this the other day, and he was like, yo, I saw the Hall of Fame pump 10%. I got excited. I was looking to buy, and I was like, did you buy? And he was like, no. And I was like, why? I said, tell me why. And he said, because we didn't see a closure above the 21. I said, you're goddamn right we didn't. The 21 dictates all of my trading decisions, which is why I'm so excited to give you guys that 21 exponential instructional video, basically laying out my entire trading checklist on paper, on video for you guys. That's why I'm so excited, because it is very important. Fortunes can be made using the 21 exponential moving average strategy. Boom, 10% pump up, hits it, rejects it. We never saw a break, and we never saw a secondary candle closure above the 21 exponential, and there's your result. you get rejection, you get continuation to new lows, and you likely get continuation to more new lows coming into tomorrow and the rest of this week. So Hall of Fame Village, from a trading perspective, all bad. Bitcoin, we're going to check out Bitcoin here. See, and this is where I was worried, right? This is where I was a little worried. We did see this nice pump up here. And again, anything can still happen. There is still plenty of time left in today, but RSI already flagging a lower high. Again, it hasn't been closed on a lower high, but it's flagged. There is a potential to see a lower high below the 21 exponential here today. And I would say confidently below yesterday's open at 57,211. Any candle closure below 57,211 on the daily time frame will confirm a lower high, at which point I will be looking for entry into this blue box territory, which is the last piece of my trading puzzle. I get a lot of arguments, man, and I want to be transparent with everybody, and I get a lot of arguments about technical analysis. I get a lot of arguments, and I never want to come on here and toot my own fucking horn, but sometimes to get my point across, I fucking kind of have to, don't I? Find your edge and stick to that edge. When trading below the 21, there is only one rule that I follow, and I'll tell you guys. As long as price action remains below the 21 exponential, I am looking down. As long as price action remains above the 21 exponential, I am looking up. Assuming both signals were confirmed with a secondary open and closure above or below the 21. This is why I want to make a video on this strategy. This is something, again, I was discussing with my business partner. We're gonna go back. We're gonna go back in time here just a little bit, right? And again, this is trading it blind. We're gonna turn off the red 10 symbol. That's just a strength, a confidence indication for my 21s here. We're gonna turn that off. What? I just got a message. Give me 1 second, ladies and gents. Nope. Here's a good example. Here's a good example on the 21 exponential. Okay? Boom. You got yourself a nice break. This isn't confirmation. You don't enter here. Again, I don't enter here. I'm not a financial advisor. This is not financial advice. This is a warning shot. We come down. We look at RSI. We say, damn. RSI is right on the 50 read. We come down and we say, oh, there's continuation from stochastics. We have ourselves a warning shot being fired. We have ourselves a warning shot being fired. You do not enter until here. You enter here, and look what happens. You don't exit until a secondary candle closure below the 21, right here. So you enter on the 23rd of July, and you exit on the 7th of September. And if you were to trade that move blindly, clean entry to clean exit, 37%. 37%. And then you get an entry here on the short side. Boom. Technically, you would lose on this position, right? If trading it blindly. But the use of other indicators allow me to take profit. So in reality, when you trade that, you can say, man, this could be a low, or this could be continuation. Nonetheless, you've exited 75% of your position by the time you see price action reach this point. Boom, 13%. Not a bad move, right? Not a bad move. Boom. You enter right here. Secondary candle closure above the 21, and you don't exit until here. It's another 27%. And this is my current position right now. Okay? I entered, and again, I don't play games with this moving average strategy. I enter it blindly. First break, boom, below the 21. 21 exponential gains a massively negative slope, right? Hits support. Following day, bounces up, tests new tentative resistance, confirms new tentative resistance, and confirms a secondary candle closure below the 21. Boom. Enter. Took profit right here. Nice little 8%. 8% on 3x. It's more than 8%. Take profit on the next level. Now you're up to 11%. And again, without leverage, without anything, you've already made 11% in just a few days. As long as price action remains below that 21, I am not confident for continuation further up. I'm not. That's my main trading fundamental factor. That is the one specific rule that I struggled with when starting out with this strategy that I no longer struggle with. I trade this 21 exponential moving average strategy with sheer confidence. Absolute confidence. I am confident that when I trade the 21 exponential, I will profit and I will secure that profit. And most of the time, you can get your risk management point into the profit as well. 21 exponential is such a powerful strategy, and I cannot wait to share my entire fundamental thought process on that strategy. But again, look, clearly rejecting right now. I want to see the short-term time frames here. Yeah, 4 hours already starting to come down below the 21 exponential here. A little bit of bearish divergence. A little bit of a rejection of the critical zone here from the stochastics. Short-term time frames look a little choppy. 1 hour looks down. 1 hour definitely looks like it wants to continue further down. Yeah, again, the 21 on the daily is the most important thing that I'm looking at here, you guys. And as long as price action remains below the 21 on Bitcoin, I am not convinced of upside and continuation. Target, again, if we confirm this top, is going to be the blue box territory. Anywhere in this blue box territory, all the way down to the spot 618 Fibonacci retracement level, $50,400 could be a possibility for price action continuation. But again, I am looking for this blue box territory to be potentially a golden opportunity here, because I still believe that this market is vastly bullish. Vastly bullish. We have seen this before. We have seen it before. Literally before our last bull run here, we hit a top, boom. We start coming down. Nice macro low right here. Boom. Shoots up to new all-time highs. Now we're looking at price action hovering around that blue box territory here, rejecting the 21 exponential, potentially looking for another top, a lower high. I'm very confident. I'm very confident as long as price action remains below 21 that it will continue to dictate price action further down. Now, it could be proved wrong. Again, the only proof wrong would be a closure above the 21, at which point I would look for the next target up somewhere around 60,700. But until that condition is met, I'm looking at another rejection of the 21. The 21 slope did not change, and it remains negative. Momentum oscillators remain negative, except for stochastics. Stochastics, the only thing that's crossing up, but again, momentum doesn't show. Momentum doesn't show. We could easily see a fresh cross in the bearish control zone, sending this one further down before we see any kind of bullish momentum once again. Again, unless proven otherwise. Again, we do have conflicting indications right now with a bad looking a bad looking RSI and a good looking stochastics. Price action is what's going to determine it for me. Price action in the 21 and how it relates to the trend, right? If the trend continues with a lower high, I'm going to be looking for continuation to the downside. If we confirm a new high above 58,960, all right, I was proven otherwise. And then you guess what? If I'm proven otherwise, I have a plan ready to be pulled. I have everything lined up to the upside for positions. For bullish positions, if this is to be confirmed as the macro low. But again, the way price action's acting right now, it looks like it wants to sell off a little bit more. And I'm looking down until it crosses that 21. And that's going to do it for Bitcoin. I think it's time for requests. It is time for requests. I'm going to be looking at Bitfarms today. Hopefully, I've been a little bit slower. Again, I hate using that drawing tool. I just want you to watch the mouse. I'm just going to slow down what I'm saying. Bitfarms, boom, here's a low. We got a low confirmed on the 50 read here. Nice. Now, the convincing factor will be if this thing continues or not. Again, this downside consolidation move here wasn't all bad. And we did get a break below the 21, right? But guess what? Boom, we hit that support. Boom, bounce back above the 21. 21 still has a positive slope here. This could easily be a low, right? It could be a structural low before bullish continuation. Do I have my fibs up? I would be very confident if we break current resistance at $7.86, price action likely goes and continues to the current all-time high resistance around $8.90 to $9, give or take. Depends on how you look at it. I would say just $9 even would be a tentative price action target that I would look for if confirmed. Now, the question is, close enough is close enough. You can already consider this region here broken. A lot of touches here. I mean, yeah, it all depends on perspective. Sometimes some of these stocks are really choppy. They're not so clean. It's hard to differentiate where the lows are. This is a low right here. Yep. So we haven't broken it. We actually met resistance, right? We met resistance. That's the low here. That's where resistance goes. We saw price action